what are the key highlights you'd pull out here? Investors seem to be focusing on margins and CapEx.
Yeah, this is, hey, Emily, this is not as you said, this is not a revenue problem, right? This is an operating margin problem. And, we saw that even though revenue in the core advertising business was quite strong, and even though revenue in some of the other revenue, which would be things like Pixel and Google Home, actually beat expectations slightly, they just are having to pay more for some of the services that they want to create. I mean, if you believe in the long game here, if you believe that this company is really going to develop over-the-top services, they're going to have to pay more for them, and you have to adjust your model in terms of what they're going to pay for those services, particularly to their TAC distribution partners. And I think Google really is going to be trying to be the video disruptor here, and that's what you're seeing in the numbers, which is a cramping of the operating margins.
Now, I spoke to Porat just before she jumped on the earnings call and asked her specifically about CapEx. And she told me, we remain very focused on investing for the long term. We take a disciplined approach to key areas. CapEx growing at a sizable clip. The primary driver continues to be investing in technical infrastructure to support growth, data centers, and machines. This reflects our outlook for global growth in ads, search, YouTube, and cloud. So sort of echoing, Crawford, what you suggested there. But Paul, investors are concerned about it.
Yeah, I think they are in the short term here, but I think the market has generally given Ruth Porat, very, very high grades for coming in and really instilling a sense of, I think, more certainty as it relates to both their operating expenses and their CapEx, so a certain level of discipline. But, the three areas where they are investing are very high growth areas, including YouTube. Internet ad spending on video is the fastest part of internet ad spending, and clearly Google's is a leader there with YouTube. So when you combine that with the cloud, another extremely fast-growing end user business, I think longer term, most Google investors feel very comfortable with Google's P&L and capital spending.
Now, there continues to be questions about how much Amazon is now taking a bite out of the digital ad pie. When Amazon reported its results, their other revenue category, which is mainly advertising, rocketed up to $10 billion. So we asked about Amazon and how serious a threat Amazon is in the conversation with Ruth Porat, and she said, whenever new inventory is created that attracts consumer interest, advertisers will be interested in advertising against that inventory. The market is continuing to grow, and there is still a tremendous amount that is offline. Crawford, would you say that the pie is growing, or is Amazon actually a threat to Alphabet?
Amazon is absolutely a threat. Amazon has got a lot of properties. They're going to be bringing on a tremendous amount of inventory going forward. And if nothing else, the classic law of economics, right? What does that mean? It means there's going to be more supply for, a finite amount of demand. So what Google is going to try to do is they're going to try to create more valuable services where they can potentially offset some of those trends. But, Amazon getting into this market, like Amazon getting into most people's market, is a threat to Google in this space.
Now, I got a question earlier. Why don't investors punish Amazon for the pressure on its margins, but punish Google in this way? And there's still a lot of data that Google doesn't give us about how fast YouTube is growing, how fast is the cloud growing, how fast is the company really diversifying beyond advertising. Paul, do we get any hints here about, how healthy is the cloud business? How healthy is YouTube, even though it has a lot of potential?
No, you're right. Google needs to do a better job with disclosure. We've been saying to them for some time, particularly about YouTube, because it's a business that's probably $8 or $9 billion of run rate revenue, relatively high margins, and we think it remains a long-term growth story for them. But I agree with Crawford that it's requiring a lot of investment, and that is pinching profitability in the near term. But I think this company, historically, Alphabet has gotten the benefit of the doubt from shareholders for making the long-term bets, not just the near-term operating expenses, but the long-term bets. Ruth has dialed back some of those crazier, more moonshot type things, and they've really focused on three key areas which they think can drive growth. And I think, again, most long-term investors will give them the benefit of the doubt.
They're also continuing their share buyback program. Take a listen to Porat on the call just moments ago.
Finally, on capital allocation, our primary use continues to be to support organic growth in our businesses, followed by retaining flexibility for acquisitions. After taking these needs into account, our board has authorized the repurchase of up to an additional $12.5 billion of our Class C capital stock.
Presumably that is welcome news to investors. Crawford, you do your own market research. Can you fill in any of the blanks here in terms of the numbers that Google is not giving us?
Yeah, so not yet. What we can see is that some of these bets are extremely long in duration. So, for example, things like Verily, things like Google Fiber, those are probably not meaningful yet, but yet the costs associated with those grew, significantly in terms of, the other bet loss. I mean, $750 million up to $1.32 billion year over year. So they're spending more money on those things, and that's also what you're seeing that's weighing on margins going forward. Now, I guess I will say that these are the one area where they need to start showing more growth and showing more progress is in the Google Cloud platform. And that's where, they've got two competitors, one being Azure or Microsoft, which is massively pivoted into the segment, and the other being Amazon, obviously. And they are third in a three-horse race right now. And I think that they need to start disclosing the kind of progress they're making with Thomas Kurian now in charge. And I think that's going to be imperative for them to get investor confidence in that segment and that they can participate. They're talking about CapEx growth in that space, but in the next few quarters, they need to start showing how they're growing revenue in that space.
Thomas Kurian, the new head of Google Cloud, who came in replacing Diane Green, but Google Cloud firmly in third place, at least as far as we know, behind Amazon and Microsoft. One interesting question I did ask Ruth Porat was about acquisitions, because this is a company that hasn't made any huge acquisitions in the last 3 years. So I asked if there were any plans to make acquisitions or if they had anything against acquisitions. And she said, we do believe acquisitions are an attractive complement to what we do to drive organic growth. They actually did more smaller acquisitions last year than the year prior, but they have a high bar for those really big acquisitions. We want to make sure if we're doing a deal, it's the right deal. And if it's the right deal, it could be an accelerant for the business. Paul, any ideas, where Google could buy smartly?
I think one of the areas that we see being disrupted is the traditional media business. And so whenever you see a big media property come onto the market, whether it was Time Warner or whether it was DirecTV or whether it was 21st Century Fox, investors always step back and say, is that a business that Google should get into in a bigger way? Yes, they have YouTube, and that is a significant online video business for them. But do they really need to jump into the deep end of the pool as it relates to content and make that another pillar of their growth, much like Jeff Bezos appears to be doing at Amazon? To date, however, Google has really shown no interest in getting into the media space. I think they're concerned about what it will do to their growth rate and what it will do to their returns. So that could be an area, but to date, we have not seen them do anything really.